Hello, everyone, and welcome to another session on this week's Money Show Virtual Expo. Without further ado, please join me in welcoming our next speaker, Garrett Patten, Senior Analyst of U.S. Equities and World Indices with ElliottWaveTrader.net, a live trading room featuring Elliott Wave analysis on market indices and stocks. Now to our live audience, please type any questions that you may have into the chat box. Time permitting, we'll do our best to get to some of those at the end of the session. And with that all said, Garrett, I will hand the mic and the screen on over to you now. I'll be right here if you need me, but the floor is all yours.
Thank you very much for the introduction, Charlotte. And there, should be able to see my screen now. So I wanted to start off today's presentation with just a very brief introduction to Elliott Wave theory. This will help those of you who are unfamiliar with that methodology kind of understand what I'm talking about when we're looking at some of the charts later in the session. So this is an article from our education section on our website that I think does a really good job of giving a good primer for people who are being introduced to Elliott Wave theory. It's pretty brief and to the point, but also packed with a lot of good information. I'm not going to go over everything, but again, just kind of familiarize yourself with the very basics of Elliott Wave theory. So the most basic structure that we're looking at in Elliott Wave theory is this 5-wave structure that makes up the larger trends within markets. So when price is progressing over time in a specific direction, it is usually what is referred to as a motive wave. Again, these are the structures that make up the larger trends in financial markets and stocks, et cetera. And then they are countered by these corrective waves. So when we see a pullback in the market against that larger trend, corrective waves, which are labeled as with letters that ABC structure, they're composed of only 3 waves as opposed to the 5-wave structure of those motive structures that are progressing price in the direction of that larger trend. And the most important thing to remember about motive waves is their purpose is to make progress. So with that 5-wave structure, they're covering more ground than that opposing 3-wave corrective structure that they're followed by. And there's a few rules that we won't go over. Next, the 2 different variations of motive structures. We have an impulse and a diagonal structure. This is kind of important because a lot of the charts we're going to be looking at later in the session are diagonal structures. So just kind of want to note the difference between the 2. Impulse structures typically tend to be much stronger in their trend and their movement. They fill out quicker in comparison to a diagonal structure. Those are a little bit more labored, in their movement and how that structure unfolds. Both still 5-wave structures though, and both still progressing price in the direction of the larger trend. Another, I think, important, not necessarily rule, but guideline that we commonly see in Elliott Wave theory is within these motive structures, there tends to be alternation between the 2 corrective portions of that 5-wave move, the wave 2 and the wave 4. More often than not, wave 2 is going to be quicker, shorter lived in comparison to the more drawn out 4th wave structure, and they just tend to alternate as far as the individual structure, that corrective structure that takes place. And the main difference between diagonals and impulsive structures, those 2 variations of motive waves, again, the diagonal structure a bit more labored in how it is filling out that 5-wave move. There tends to be overlap with the wave 4 compared to the wave 1 price territory, and then more often than not, the subwave structures are going to be ABCs. It's a little bit confusing because I know that ABC structures are supposed to be corrective, but it just is how those individual diagonals tend to play out, just a different variation of the subwave structure in there. So again, we're going to be looking at a lot of those diagonal structures when we get to the charts at the end. Next, I wanted to go over quickly Fibonacci Pinball. And this is the methodology we use in order to come up with specific targets for our trade setups and also help us navigate those motive structures regarding, again, which targets we're looking for, as well as early warning signs when price is deviating from those expectations, when we know that we should either change our expectation or, in the case of a trade setup, maybe stop at a specific level that we don't want to see otherwise broken. So it's a pretty simple process how we use Fibonacci Pinball to come up with these targets. So in the initial stage of that larger motive structure that's going to progress price the direction of the larger trend, the start to that should be a 1-2. Again, it's a 5-wave move. Initial wave 1, and then that correction as wave 2 sets up the start to that larger impulse or diagonal, that larger motive wave. And once we have that 1-2 in place, we're going to measure the distance that price traveled or covered in that wave 1 and project that measurement, that distance from the bottom of wave 2. And that gives us our Fib extension levels that we use as the targets, the standard targets we expect the rest of the structure to fill out as. So if we're dealing with an impulse, typically our wave 1 of 3 is going to target between the 382 and the 618 Fib. And in the instance where it stops at a 382 extension, typically our wave 3 of 3 will target the 100% extension. And any pullback as a wave 4 of 3, if it stops at the 100% extension, should hold the 618 Fib. So that's kind of what I was referring to when we can use it as also a guideline to tell us when price is deviating from that expectation and we should change expectations or maybe reconsider the trade. So breaking below a 618 Fib on a wave 4 is one of those instances where that is suggesting that price is not following an impulse, not cooperating well with Fibonacci Pinball. So a warning sign that something else could be at play. Assuming that support holds though, usually a 1382 Fib extension is the target for wave 5 of 3. If the wave 3 of 3 stopped at the 100% extension, wave 4 should hold the 764 Fib. Another situation where a break below there is a warning sign that something else could be at play. And as long as that support holds, head to the 1764 extension. That's just one example of common targets that we see. So here's just another example where we get a little bit larger wave 1 and kind of just raises the targets for the rest of those subsequent subwaves. And then another example where we see an extension during a portion of the move, what to do, what to expect after that, and how to adjust those targets for Fibs, as well as our standard targets and expectations for diagonal structure. And again, we're going to be looking at a lot of diagonals at the end of the video, so probably worth taking a look at this. Same approach where we take the measurement of that wave 1, project that measurement from the bottom of wave 2. In this case, the target range that we typically expect for wave 3 tends to be a minimum of 100% extension. Most common target is the 1236 extension, and typical higher end of the range is a 1382. Not to say that we don't see larger third waves than that in diagonal structures. We're going to see some examples of those, but just statistically, those are the more common targets that a wave 3 tends to reach. So with that brief introduction, next I wanted to kind of quickly look at just the service, what we offer in Stock Waves, what you can expect as a member. If you do decide to take the trial, we offer a 15-day trial, no credit card required. One of my favorite pieces of content that we have is some of the articles that we do, that we put out. A lot of them go to Seeking Alpha. And otherwise, one of our contributors, Lynn, if you're unfamiliar, I think she's one of the best macro analysts in the business. She does these exclusive deep dives for us, and technicals versus fundamentals, taking a look at our technical charts for stocks, and then kind of weighing the fundamental side of the equation as well for us. And just some really great content that she puts out. But a lot of the wave setups that we post, trade recommendations, we tend to do some individual articles that go more in depth on those setups. So an example recently posted one was AMD. We had a short trade on that back in on October 8th. That was, I think, the exact day that it topped in that B wave. And basically just going over kind of how our expectation for that C wave down has filled out so far. And basically, we still expect that to continue a little bit lower before that corrective pullback completes and a more sustainable bottom is ultimately put in place there. Another feature that we offer for Stock Waves, earnings season just started, as I'm sure many of you are aware. During earnings season, we try to take a look at the majority of individual stocks that are reporting after the close that day and before the market opened the next day. So it just helps members who, especially if they have longer term holdings in these positions, kind of approach that earnings hurdle, that minefield that we have during this time of the year, where you may want to protect a position, sell covered calls, whatever strategy to mitigate whatever risk we potentially see, or maybe even add to the position if it looks good for continuation in the expected direction. We also offer some more specific parameters that people can use for trade setups during earnings seasons on these earning calls, ones that we have a little bit more conviction in. A good example of one that we had last week, Netflix, was one that I posted more specific parameters on. It looked like a good setup to the long side. So we have a specific entry price, obviously the expected direction, and then an invalidation level so that you can kind of frame a trade setup based on that analysis, and did follow through nicely in that wave 5 on earnings last week. Next up, we have specific wave setups. So these are the individual stocks, the charts that we think have some actionable potential. So we give you specific parameters that you can develop a trade strategy or plan around. We give you a support level that we want to see hold on whatever pullback that may occur on that chart, an invalidation level where if it breaks that level, our expectation, our thesis is wrong. So that's usually where we recommend a stop below. Resistance, as far as if price reaches that specific level, clearing that is the next step towards providing further evidence or confirmation that it is following through with that setup or thesis. Overall target, that is kind of where we're aiming for that specific stock to reach before it's satisfied the upside that we expect. Latest price, kind of a rough time frame. M stands for months, so we expect it to take several months to fill out, and then just a ranking system that I won't go into the detail of that, but you'll see most of these have been recently added over the past few sessions, over the past few days. Some of them are from a lot later though, or a lot earlier, excuse me. For example, this one PLNT is showing up on the list, but it was initially posted back in March of last year. And they show up on the list when it gets an update to that wave setup. So for example, when we reach a specific resistance level that we had previously listed in that setup, we'll post an update, raise that resistance to wherever the next resistance level we see is, probably raise support, probably raise the invalidation level as well, kind of give you an update of how price is progressing along in that specific trade. And then I'm going to actually, let me take a look at the videos first. And then another feature that we have is every day, Monday through Thursday, we do a video. After the close, Monday through Wednesday, we do what we call charts of the day videos. So the most recent one yesterday, I went over a lot of those recently added wave setups, ACAM, A6, MD, GL, Coin, CLAC, PLTR, and DPZ. So just describing those setups in a little bit more detail, kind of verbalizing expectations, etc. Maybe adding a little bit more detail to the smaller degree expectations for that setup. And then on Thursdays, we do our weekly live video, which members can attend. And during those Thursday videos, what we do is we pick a specific sector ETF. Last Thursday, I picked XLU, and we go through the top, at least the majority of the top individual holdings of that ETF, that sector ETF, kind of look at which of those individual charts seem to agree with the expectations that we have for that specific ETF, or maybe disagree, or which setups look like the best kind of trade potential for that expectation. And then we open the session to requests from individual members. So everybody gets 2 requests they can make, and we'll go over all those individual charts as well. So now I wanted to shift to charts. So hopefully now you see my charting software pulled up. The S&P 500 daily chart should be what you see on the screen currently. I wanted to first start off with my expectation for indices, broader expectation for the market. So as you can see here for the SPX, I do currently expect price to continue to reach higher in the near term, but with the expectation also that it is likely we are approaching a more significant top to set up a pretty decent sized correction that can kind of fill out maybe into the summer before heading higher into the end of the year. So this is a diagonal structure. Again, that's why I wanted to kind of emphasize those when we were looking at the analytics at the beginning of the video. You can see that the subwaves are made up of ABC structures, and my expectation is we are currently in wave C of 3 off of the August low, where price completed wave 4 of C at the January low and has started the wave 5 of C. So again, the expectation that price can continue to reach higher near term before that wave 5 of C completes. The 1618 fib extension, this is Fibonacci Pinball. This is how we come up with our targets based on the size of the 1-2 here, would be the ideal target for that wave 5 of C to reach, which is 6427. And then again, the potential for price to put in a top, complete the wave 3 there, set up the wave 4 correction of our diagonal or motive wave. I didn't show this part when I was combing over the Fibonacci Pinball, this specific example, but typically a 1618 fib extension when reached in the wave 3 tends to lead to a 100% extension as the target for the wave 4. So that's back at 5415 in this instance. And then usually a 200% extension is the target for the wave 5. I have a little bit more optimistic target than that, but that 200% fit would be at 71.45. This expectation is based on price continuing to hold above the January low. Highest probability that we will see further near-term upside is this wave 5 of C. However, there is technically even an option where this wave 4 turns into a wider flat, revisits that January low, and then heads to the new higher high as the wave 5 of C. But currently odds favor that fifth having already started. Next up, the NASDAQ, very similar expectation, larger degree diagonal structure off of the 2022 low that I showed on the SPX chart, where it looks like it is working on the wave C of 3 off of the August low and ideally completed the wave 4 of that C wave at the January low, is trying to start the wave 5 of C. Now, this is a little bit more common fib targets that we expect during a diagonal structure, as I mentioned when we were looking at that Fibonacci Pinball education section. The most common target for a third wave within a diagonal structure is the 1, 2, 3, 6 extension based on the size of the 1, 2. In this instance, at 23,700. So that would be the ideal target to reach before that wave 5 of C, in the larger wave 3 completes, and then set up the higher degree wave 4 correction. Usually after a 1, 2, 3, 6 fib is reached in the wave 3 of a diagonal, the 618 fib is the target for wave 4. In this case, that is at 18,250 roughly. Same situation as the SPX, highest probability that price sees this wave 5 of C fill out to the next higher fib target if price can hold above the January low. However, there is a valid option where this wave 4 turns into a wider flat and could even dip below that low in this case. And then reattempt that wave 5 of C to the upside. But again, better probability if it holds the January low. Moving on to the Russell 2000, bit of a different look and expectation here in comparison to the SPX and the NASDAQ. Not as clearly set up to head back to a new higher high compared to the high that was struck in November of last year. However, it does also look at least reasonably set up to attempt higher in this current bounce off of the January low. But in this case, it can be a B wave within a larger corrective structure off of the November high. So again, those A, B, C structures make up the corrective moves within those Elliott Wave patterns. I wouldn't be surprised near term to see a little bit lower in this B wave, head to this retrace support range, 2258 to 2220 before trying to turn higher again. As long as that support holds, though, again, I think we can get this C wave higher before this B wave bounce finishes. So that is my expectation for the indexes. Now I wanted to take a look at some individual sectors. I wanted to start off with semiconductors. Obviously, the news, the DeepSeek news over the weekend that shook markets, especially the semiconductor stocks yesterday. Let's kind of take a look at where we're at, what important support is here, and what our bullish and bearish options are. So the bullish option is drawn up on the chart in blue. This is the SOX index. It would be working on the A and now a wider flat B wave within the fifth, another diagonal structure off of the 2022 low, this one already in the fifth wave. But it really should be holding this 618 retrace here at about 4,700, at least to maintain reasonable probability the price will follow that bullish blue path and try to make its way back above the January high and eventually back above last year's high in this wave CF5. Otherwise, the further it gets below that 618 retrace 4,700, the more and more risk increases that it is following the bearish path, which is the wave 4 not yet complete. This was instead just wave B of 4 and is starting the wave C of 4, which can make its way back down to likely undercut the August low that was made last year before that red wave C of 4 completes. So let's take a look at some of the individual charts. NVIDIA, obviously being the highest weighted in both the SOX and in SMH. It's another semiconductor ETF we look at commonly. In this case, as a diagonal structure off the August low, this is kind of a zoomed in view of that similar diagonal on the SPX and the NASDAQ chart that I was showing. Price yesterday dropped down to test a 618 retrace of the size of the wave 3. And within our expectations for diagonal structures, the 618 retrace is the lower end of support. We want to see a wave 4 hold. So if it breaks below 618 retrace, that is one of those situations where we have those parameters that tells us something else is at play. We should adjust our expectations. It doesn't look at least reliable as a wave 4 pullback when that support breaks. So far, that support in this case has held. So I view yesterday's low in NVIDIA very important moving forward. If it is going to continue to fill out something bullish from here and eventually make its way back above the previous highs in the month, is what will be this fifth wave, which should be an ABC structure. Back below yesterday's low, and the risk that I would consider at that point is either a much more muted fifth wave already topped, or it's getting kind of that same wider flat wave 4 that I showed as the bearish option on the SOX chart. That can take it back to retest the August low. We already looked at AMD with that article. One of the recent wave setups that we posted, I posted this yesterday, KLAC, I think is one of the better looking opportunities for something bullish to hold as far as semiconductor stocks go. Here, a possible 1-2 start to a fifth wave. In this case, a larger impulse off the 2022 low, but it looks like the smaller degree fifth wave will be a diagonal. It's pulled back into the middle of retrace support. We want to see wave 2 hold, so there's room for a little bit lower to that 618 fib, 672. Ideally, that is support that holds, keeps pressure to the upside. Invalidation is a break below the November low. So these are the parameters we give you for those trade setups, so you can develop a trading plan around them. Another sector I wanted to take a look at that I think has some interesting potential, stands out as kind of a different structure and look compared to the larger indexes. Materials, XLB is the spider ETF that I'm looking at currently. In this case, as a diagonal off of the 2022 low, where, as I was showing on the index charts, it looks like price can still reach a little bit higher before completing the wave 3. In this case, it looks like that wave 3 already topped last year, and price is filled out. If it is wave 4 of a diagonal, what should be all of that wave 4 already complete. So there's some reasonable risk reward developing here, trading against that low that was made at the start of the month, especially if we get a near-term pullback for a better entry point compared to that low. And that offers good risk reward with the expectation the price will turn higher and fill out that wave 5 to complete the diagonal with about 105, 106 is the ideal target. There are some individual stocks also within that sector that stand out, I think, has some good opportunities. APD, another diagonal structure off of last year's low. In this case, it looks like it's starting the wave C of 3. Would prefer to see a wave 2 pullback before attempting a break above the December high in the wave 3 of C, but especially in retrace support, attempting an entry there with a stop below the January low offers good risk reward for a trade setup in that sector. ECL, this has been tracking an impulse off of the 2022 low well, where price looks like it just completed the wave 4 of 3. So another opportunity trading against the January low for good risk reward. The price is starting the wave 5 of 3, and looking at 289 is the expected target for that wave 5 of 3 to reach based on our Fibonacci pinball, based on the size of the 1, 2 here, and projecting those fibs off of that 1, 2. Kind of running out of time here, so I think I'm going to save the last 4 minutes for questions. I had a few more charts to go over, but if there are any questions.
We do have just one at this time from Jess. She was asking about Bitcoin. She says, Garrett, do you look at Bitcoin? Do you find Elliott Wave is effective for this as well?
Absolutely. Elliott Wave theory, as long as the market trends over time in a direction, should work well with Elliott Wave analysis. Bitcoin has been filling out a nice impulsive structure off of the 2022 low, where price completed wave 4 of that impulse at the August low last year and is filling out the 5th wave of that impulse since then. The expectation is to see at least one more higher high before that 5th wave completes. The more bullish option is we get another 4 and 5 after that. So it looks like we should at least be trying to head up to the 130 region before potentially topping.
Thank you, Garrett. It looks like we just got another question in here from Monica. What is the expected target of APD?
So in this case, because this looks like wave 1 of C, it's a situation where we use the smaller degree proportions of that structure to guess, educated guess what the target for the larger wave C of 3 in this case would be. And it looks like that would be the 161 extension there, close to about 400. And that is a pretty common target for a third wave to reach, even in a diagonal structure, more common for an impulse. But again, if this is the 1-2 start to the C wave, that looks like the high probability target currently.
Thank you, Garrett. I don't think we have any more questions coming in at this time. If you did want to go ahead and look at one of those charts you said that you were considering showing us. Oh,
yeah, sure. Just one other.
You know what? Why don't you show that one last chart, and then I'll have one more question for you.
One other sector I think stands out as a good opportunity currently developing, forming here is energy stocks. In this situation, in most cases, trading against the December low. For XLE, it looks like a possible 1-2 start to a C wave. It can reach a little bit lower in this wave too, but that 618 retrace 87 is ideal support to hold. And then just one of the individual stocks that I was going to show from that we recently posted a wave setup on is Oxy, a possible 1-2 off of the December low and good risk reward trading against that December low.
Oh, wonderful. That gave us just enough time for a couple more questions to come through here. Greg had asked, what about CRWD and or RDDT?
Crowd and Reddit. I mean, this is something we do during a Thursday webinar, so where we take requests. I would prefer to answer more specific questions on what I went over, though, rather than just chart requests.
Perfect. Well, we have a more general question here from Gregory asking if there are any other sector themes.
Specific sectors that I think have bullish potential, I assume.
I would assume so. Yeah, he wasn't more
The
specific.
majority of sectors look very similar to the indices. So a lot of them do have that same near-term bullish potential to continue to fill out this wave 5 of C before the larger wave 3 completes. The reason I picked those three sectors, semiconductors, materials, and energy, semiconductors, obviously, because of the news this week and the big movement we saw in those stocks, and the materials and energy, because they are two sectors that look different in their respective patterns. So don't necessarily have to follow the same expectation as the indices.
Thank you very much, Garrett. I know we're coming right up a long time here. Now, I know you had just mentioned you guys have webinars on Thursdays for those in our audience who want more they want to see specific examples and things like that. How might the members of our audience get involved with you guys and potentially make an account?
Right. So as I mentioned, we offer a free 15-day trial, no credit card required. Just head over to ElliottWaveTrader.net, and the first screen you see pop up should allow you to sign up for that trial.
Fantastic. Well, Garrett, thank you so much again for a wonderful presentation. And I'm glad we could squeeze in a couple of questions in there as well.
Me too.
Alrighty, to those of you in our live audience, we do still have one more session in store for you today. So stay tuned for the rest of this Money Show Virtual Expo. And of course, tune back in tomorrow for another full day of content. I hope everyone has a wonderful rest of your day. Take care.